Hey, how's it going, everybody? Brian Hoops, Midwest Market Solutions. Latest Insider Video TV commentaries. It's Tuesday afternoon, November the 21st. Markets closed here, and I want to look at a couple things. Not a real exciting day in the markets, but some things to talk about nonetheless here. We'll start off with soybeans and soybean meal. Soybean meal has been one of the more stout commodities, and you can see here we just had an inside day today after breaking out to the upside on Monday. I think this market could pull back a little bit along with soybeans. You notice both soybeans and meal have had inside days the last couple days. That's a sign of consolidation, and likely a little bit of a pullback now is going to develop. You can see here we were kind of trending lower, had a consolidation and then moved higher. Here we had moved higher, consolidated, and then started to move lower. So I think it's very likely we could see a little bit of a pullback here in soybeans and soybean meal. The forecasts in Argentina are a little bit wetter than previous days, and that suggests that some rain is in the forecast. That could see things on the downside, on the defensive. Now, corn has not consolidated. In fact, each day we've continued to push our way just slightly higher despite any exports or lack of news there. Farmers are going to be very slow sellers until I think we get up into this range in here, up into this 350, all the way up to 355, 358. It doesn't look like much of a rally, but we were 336 just a few days ago on the continuation chart. So 15, 20 cent rally back up in this trading range I think is likely going to attract a lot of selling. And you look at it, this is a weekly chart in corn. This is very top end of the range going all the way back to August, when we thought we had a much smaller crop than what the USDA has said. We get back up into that 355 area. I think we will look at quite a bit of selling coming into the marketplace. And again, if we would get back to 378. So could be a long winter months. And I think producers want to be trying to make some cash sales. Here you notice the seasonal trend is for a bias to move higher into the spring time frame. There was a decent article on DTN. If you have DTN information, talked about in big crop years how normally you can be paid through carry and basis improvement through the winter months to be paid for storing corn, but not if you're storing in commercial storage. So not much going on in corn. There was a soybean sale, 130,000 beans to China this morning. That was a supportive feature. And wheat did move higher today, 3 cents higher, but we're still locked in this trading range here in the winter wheat contracts, Kansas City and Chicago. Again, just going sideways to nowhere. In the cattle market, we had a recovery here today, pulling up a cattle chart. And where can this market recover back to if you want to put some hedges in place? Well, I think this is a logical place to assume this resistance point, 127.60, right in this area should be a resistance point on the charts. And if you look at just some straight retracements, that's also very close to 50% retracement. 128.50 is a 50%, 129.50. Those would be some pretty good moves back to the upside in here. And look at this big seasonal downward move that's coming in this cattle market. So I think if we do see a rally, it will get sold by the trade, and we'll see prices start to work their way back lower. All right, I want to mention in the hogs before we go, outside reversal day there. So that's usually bearish. Doesn't always have to be. We had 3 reversals on this up move here in the hogs. They were negated within a couple days. We'll see if this one can be negated here. Otherwise, it looks like this market's a downtrend, a small up, and now a reversal. Seasonals are coming down. This hog market may want to turn and head lower. Have a great night. Brian Hoops from Midwest Market Solutions.